Trevor's going to do most of the morning, right? About an hour, hour and a half. And then a break, then John, then lunch. And then John and I are going to come on and collaborate a little bit together. We'll have two projector screens up. One will have my stuff, one will have John's stuff. So we'll go back and forth and talk about what it looks like on the profile, and then we'll drill down what it looks like on the footprint to qualify. You know, the biggest weakness of any strategy is pulling the trigger. Even in life, pulling the trigger. You know, ask any woman how long it takes to get the guy to say, "Will you marry me?" You know, I'll do it now. Damn it. Pulling the trigger. So that. So that's where everyone's weaknesses lie. I got to read this again, though, because I'm pretty proud I wrote it. And that was everyone's the best and worst version of yourself. And it's because there's a friend of mine who's going through a divorce, and we were talking about what's the worst version of him. And I said, you know, everyone has that. Everyone has their high and low point during the course of a day, let alone a week, a month, or a life. So it's about knowing when you're at your weak point and that recognition. And that's what trading is about. Bad trading, at least if you know you're trading like crap, you got a chance to fix it. If you know you're acting your worst, you know you got a chance to get up. But it's about being around people that'll tell you that you're acting like crap, not because they hate you, but because they want you to be better. There's a difference who you listen to. Because if you are listening to foes and enemies about critiques, they're just doing it because they want to bring you down and they don't like you. If you're listening to your spouse, especially your wife, they're actually doing it because they want you to get better. And so just keep that in mind as you go through the rest of this last day and these last few sessions. So with that, let's give Trevor a round of applause and we'll get rolling.
All right. So today, I think today you'll find we're tying a lot of this stuff we've been talking about together. At least that's my hope. I'm going to be speaking specifically about the footprint profile, and I want to show, basically I'm going to kind of give an overview of what that is. Now some of you guys know what it is, some of you don't. So I'm going to spend a few minutes on what that is. But then I'm going to quickly move into a pretty advanced setup. I use it personally. So today we've kind of heard strategy versus tactic. This is a tactic. It's going to be very specific, and I'm sure there'll be questions, but just ask as we move through. So first thing I want to just cover is what is a footprint profile. It's not market profile, and it's not just a footprint. How many of you, let me ask just a quick poll, who uses the imbalanced footprint? I'm assuming that's the most popular. Is that, okay. Any other types that guys are using? Just shout them out. That's the main one? Okay. Well, this one, the imbalanced footprint is a footprint type. In the software, it's a footprint type. What you see right here is the delta footprint. I'm not going to describe so much what it is. It's a footprint, but it's showing you the delta at each price. This one would be, they'll just think of it as a volume profile. So what the footprint profile does is combines the data that's inherent in the delta footprint with a volume profile to essentially get this, the footprint profile. So you end up having the color of the delta at each price, but you get the shape, the length, all the features that a volume profile has to offer. So it's a really nice combination with a lot of data and a lot of things you're able to extract from that. And so what we're going to look at today is a specific setup based off this type of graphic. And I'll show you how to even set it up at the end. So 5 attributes of these footprint profiles are height. So I call that volatility. The taller it is, it gives you an idea there's more volatility within the bar. It covered more prices. Width. That's just the width of each price, how much volume. The wider it is, the more volume that traded at that price. That's, you probably know that, but I want to make sure because that's going to be key to what we're talking about today. Shape, how is it shaped? Is it a normal distribution? Is it bulging at the top, bulging at the bottom? And that's just representative of the auction. Where and how did that happen? Colors, the aggressor, that's the order flow, that's the delta. So that's what you're seeing here. Any shade of red represents more aggressive selling, more trading on the bid, and any green represents more trading on the offer. So a lot of this stuff I assume most of you know, but I'm saying it because I want to make sure you understand these fundamentals before we get into some of this more advanced. And then the POC, which we've talked quite a bit about on the market profile. POC would just simply be the one that is the widest or the fattest, the most volume. And so we'll be referencing that quite a bit today. So this is a great tool for interpreting the auction, giving you an idea of how the market is developing. Are we seeing more and more volume come in at higher and higher prices, lower and lower prices? What's that order flow look like within the bar? Judging market at key levels. So hopefully one of the take-home points I feel from this event is going to be being able to use market profile, or those types of levels, and then judging them using the footprint at those key levels. That's hopefully something you go home with that gives you kind of that big picture view of where you want to zoom in, focus in on doing trade, and then being able to step inside and make that decision, qualify the trade using the footprint. That's really one of the core things, and I'm sure you're going to see a lot of that this afternoon. Judging which side to trade from, it's a good tool for that. And you're going to see here as I develop this thought. And then just as an adjunct to a primary system or filter, not everybody's just going to use a footprint or a profile as their only tool. It's going to be part of their tool set. And so, and we recognize that. So the goal here is to help you understand what it is and how you might apply it to other things that you're looking at. So let me get caught up here. All right, so this I like to look at the market as having two market phases, and I'm not here to argue that. That's just how I view it. Trending versus bracketed. Bracketed would be sideways or just consolidation, however you want to think of it. But when I look at a market, I try to determine what is the phase. Is it trending or is it more sideways? And once I can determine that, then that helps me determine how I want to trade at my levels. So a new high or testing of a new high in a sideways market, I'm going to see different patterns using what I'm going to show you than what I would expect on a trending market, and I would trade that differently. So that's where I say that because we're going to be looking quite a bit at trending markets today, some examples, but I'll show some bracketed or consolidation, range-bound markets as well. Personally, I like the range-bound better. I trade better on those because I like to take the other side of the trade. So in a trending market, taking the other side, you can imagine, doesn't work as well. And so you're constantly fighting the market, where range-bound, I don't know, I like it more because there's just more, I feel like there's more consistency to it. So yeah, and then we're going to look at some specific tactics on that. Okay, so let's dive into it. Now I know one bar is not a trend. I know that, but I kind of want to look at, this bar is up so we can kind of take a look at it. An uptrend, higher highs and higher lows. That's pretty straightforward. An up bar, So say we're looking at a trend. We want the up bar. We want to see the POC in the top half of the range and have it have a positive delta. That's ideal. So let's break that down. POC, I have it outlined here in black. We want, since this is an up bar, this bar opened here and actually closed at the very high. It's about as up bar as you could get. But we'd want to see this POC, and remember we're talking trending markets. We'd like to see this POC, above this level, above the midpoint, to kind of confirm that the market is bringing volumes coming in at higher and higher levels, supporting the move. And so this would be one bar, but the next bar and the next bar, we'd really want to see this POC. One, we want to see it migrating bar to bar, but we want to see it be in the top half. When I see it move down to the bottom or below that, then you start to call into question, is the market starting to balance out and be rejected as it pushes higher and higher. Never mind these blue marks for now. We'll be talking about some of that in a moment. But this would be just a simple uptrend bar. All right, so now we're looking at a progression of bars that did go higher. And these points here, these are all the things we'd be looking for in a move higher. And you might be able to come up with some others, but these are definitely the obvious ones. Higher highs and higher lows, that's what a uptrend is. POC, as we just talked about. Now I don't have it outlined. Here, I won't stand in front. I don't have it outlined now, but it's just simply that widest bar. So you could see here it was migrating, right? And then it still went higher here. This was the first bar where it's kind of midpoint. It did step back, and it actually had a negative delta. Now I said that, and it's in here somewhere probably, positive bar delta. Or no, that's not what. Is that even on this one?
I'm good looking. On the previous page.
Yeah, it was on the previous page. I'd like to see it be positive. I'd like to see this be green, but it doesn't have to be. I don't want to make too big a deal about that. There's obviously the ideal, and then there's what we all have to trade, and it's never ideal. And if it is, it's probably not gonna work. So there's that. P-shaped. Now, I don't want to make the P-shape is. You hear that a lot in market profile, P-shape and B-shape. P would be, it goes up and it kind of develops more of a bulge in volume. I like to see that in an uptrend because it's telling me that as it goes higher, it's drawing in more and more participants. Just makes sense. It's drawing in, as the price goes higher, more and more people are willing to pay higher and higher prices. That's supportive of a move higher. That seems basic and fundamental, but unless you're looking at the data this way, you don't know that. You just see an up bar, and yeah, price went higher, but you don't realize how that happened. Positive bar delta. Now this is important. Hopefully you're able to, down here at the bottom, I just have delta. This is just delta for the bar. This is important, especially in the trending markets, because what you want to see, I mean, you got a lot of colors going on in here. In fact, like there's actually maybe as much red as there is green in this bar. Yet it was it was a strong bar. What I like to look at, if I question the bar at all, like if I see it, that looks a little, I'm maybe looking to sell it, let's say, after a big move, and I've got a lot of the red. I look down here, and is this positive or negative? It's still positive, net positive, and for me, that's good enough. I mean, the market's trending. If it's still positive, that's good. That's good enough, and you have to stick with it until proven otherwise. And you're proven otherwise when price tells you. And for me, when price starts to take out lows of previous bars, then you're starting to see it either equalize or potentially roll over. So that's where my last point, inability to auction counter trend. I mean, these are nice, clean trends. Higher highs, higher lows. You'll see this a lot. Then here's one, you get a higher high with a lower low. That should put you on guard. And the POC comes into line. So I'm not saying you get short and you sell the world up there. I'm just saying that's where you'd start to be like, okay, I need to either lighten up some of my position or just be on guard that there could be a change in what's happening. Any questions on that?
The intensity or the shading of the colors, for instance, on the third bar from the left, Trevor, you have a really dark green at the top.
You're talking, oh, this one right here?
That one, and then if you look over to the right, the second to the last bar, you got the really dark red.
Yeah.
What's the significance of those two? Do you know?
Yeah, so the darker the shade, the larger the delta. That's what you're seeing.
Okay.
The absolute. So this had a fairly large negative delta. I believe that's how this is, and same here. The lighter the shade, it's just more of a neutral. It's it's not as the magnitude of the delta is not as great. I mean, there's always the idea. The ideal would be these would all be strong, real strong green, right? But that's not the way it is. You kind of have to look at it. I like the aggregate. I like to see what's this. This is the aggregate down here. This tells us the bar, the delta for the bar. But then what's what we're seeing in here. This is all positive. That's all good stuff. And these bars are all closing higher. Notice this. This here. Open here, closed here. That's what you're seeing it. You're seeing it all happen. This is all fundamental. It's basic stuff. But what we're going to be focusing on are these. You'll see here the volume that's coming in at these levels. Any other questions on that?
Yeah, I was just wondering, when you're looking at this, what are you setting as like your bar? Are you using like minutes? Are you using tick? What do you use?
I think the examples that I pulled, I might have used just actually time-based bars because that's not what I use, but I used it because I wanted to try and use something very standardized for everybody that everybody would understand. I think these might have been,
Looks like 10 minutes.
yeah, I don't know what they were, but I'm a big proponent, and heck, I've said this forever, is non-time-based bars. And that could be your point, like your reversal-based bars, tick bars, volume bars, delta bars. I mean, anything but time bars. Although this stuff it'll work on time bars, and I actually like to look at it on some of the longer time frames when I'm trying to give myself a bigger picture, maybe 30-minute bars of these. That's nice. It's kind of like a quasi profile in a way. But when it comes down to the execution, I'm really looking at these in a non-time-based manner.
Okay. Now, are you using like this to? Are you using this like in like conjunction with like the imbalance footprints and stuff
Yeah.
like that? Are you getting your
Yeah.
kind of larger picture ideas from this?
Yeah. So I'm actually going there.
Okay,
I'm gonna weave in some the specific setup I'm showing. Actually, I'm introducing imbalance onto this chart
Okay.
to show it's a pretty specific signal.
Okay.
And so you'll see it. So it's good that a lot of you guys are looking at imbalance because I'm going to show you how you can use that information on a graphic like this and have a pretty unique setup. So we were looking at some uptrends. Here's your downtrend. I'm not going to talk too long about this, but what's the one difference here you see on these downtrending bars are, well, clearly you see more red, but notice this is kind of that ideal bar. You want to see more of that bulge down at the bottom. Hidden lower, and you get a lot of the volume in the lower half of the bar. That's kind of what we want to see. So moving into the next, this is just kind of the opposite of that uptrend where you get the progression lower. Clearly, quite a bit of reds, but you got the POCs and these black outlines this time. You can follow that along. But what I like to see are these longer bars down near the lower half. That's what you really want to see. I'm not going to go through all these points, but you're going to get B-shaped more on this. Again, that's not, I don't like to, I put that up because it's something that ideally, but you're not going to see that all the time. For instance, here you've kind of got quite a bit of volume up here and you got here. There's really not perfect Bs. I mean, I guess you could do these, but I'm not going to, I just don't like to try and make it up if it's not really there. Down here, the delta, on these, you're going to see, if you question what, like a bar like this one, you might question a little bit because you see some clusters here buying. You see this. I immediately go down to look at this. What am I seeing? And it's still negative. And the fact is, it closed pretty much on its lows. It's a weak bar. And then the biggest thing is this inability to auction counter trend. I mean, when the market's moving, when it's going in a direction, ultimately its ability to move opposite of that direction is key. And if it cannot take out the previous bar's high or the previous two bars, I mean that I usually don't just look at the previous bar, but the previous two bars. That'll tell you a lot right there with the strength of the trend. And in fact, you could even use those as stops, as an area for stop placement. But let's I want to get down into the kind of the meat of what this is. Yeah, let's talk about this for a minute because this is so. This was a 5-minute bar. You can clearly see where you got areas of high volume. Strong, very strong bar there, but it's not going to go forever. Then you get these short squat bars, I call them, where it just kind of the market rallies up, and of course you're probably trying to look to sell it, and then it just doesn't pull back. I mean, it sits there and it's churning. And sometimes you're like, well, I just need to give it some time. But the thing is still, this is where I still like to look down here. What am I seeing? There's still accumulation happening. The delta's positive, and it's just coiling. That's what's going on. And of course, it's one thing to look at it after the fact. But what you need to think is you can't see any of this. And you just know this thing rallied and it's doing this. And you're trying to position yourself either for more upside or for a break, or more of a break. But when it goes into these tight ranges like this, in the top like third or quarter of a bar, and you got positive delta, you pretty much, it's much safer to assume more upside than it is to say, oh yeah, this is going to retrace this whole move back.
Say that again.
When you get an impulsive move like this, and then it sits and coils, and heck, this isn't even the top half. It's like the top quarter or top third of the bar. It's a much safer assumption that it's going to continue than roll over and head back down.
And is that a large part because the delta stay positive?
Yeah, that's a big part of it. But it's also that it's just tight range. I mean, it's not pulling back, and it's natural for a market to run and then pause, and then run and pause, and that's what you see. That's what you see. Probably the hardest part is right here, where it does take out new highs and then it pulls back. These are always this is where it's tough because you're like, oh boy, I just bought this one. I just bought it, and now this is the time it rolls back. But
So would you say, like the top two, it rallies again and it starts to kind of pause down again, would you say those are not significant until like the delta goes negative? Like those pullbacks are.
Yeah, I'd like to, yeah, that's where, certainly when I start to see negative deltas where you
Get nervous.
no, I wouldn't get nervous, but I'd be on guard. I
Yeah,
mean,
okay.
I try not to be nervous with any trade, but
Yeah, right.
yeah, I know what you mean. Yeah, your guard's got to be up. And then watching these POCs, watching that. I mean, the one thing is you got to be careful. I was talking to somebody yesterday. The hardest, this for me, the hardest markets on a trend, and maybe forget this move, but we've seen a lot of these lately where the market just creeps, trends, it's a creep, just keeps grinding higher. And you get short, you sell it for whatever reason, and it may give you a tick or two or a little bit, but then it just keeps, it gets against you a little bit, and you want to give it some time to work. You want to let the trade work out. At least I do. I don't want to just get out. I want to give the trade some room. But then what happens? You get lulled to sleep with this. The market's actually creeping against you. It doesn't feel like it, but it is. It's just a real slow move. And that's, I hate that. That's, yeah, because that's right. It'll do that, and then about the time you're like, this is, okay, I feel the pain, I got to get out. It does. It spurts, and it's because it's the same thing for everybody. Everybody's chasing it at once. It's a pain threshold. So, anyway.
The cool thing is the next day you look and say, I should have bought it here and sold it here.
Or it's like, what was I thinking? Why did I not see that? Okay, so here's where we get into the meat of this. It's simply I refer to it as absorption. And I'll show some examples so you can understand what it is, and then we'll look at the setup. But it's passive sellers or buyers. So what do I mean by that? So passive sellers or buyers, and this is the interesting thing is these slides were all put together before, obviously before these talks, and you don't know what everybody's going to say, but I think it was Brett yesterday talking about how the algos, they don't want to be lifting the offer, hitting the bid. They're using these algos to determine liquidity to work their offers or work their bids, and how much they're going to be able to get done. Well, that's passive. So passive is you putting a bid in the market and letting the market fill you. Somebody trades into you and you get filled. Does that make sense to everybody when I say passive? Where aggressive is like a market order. You wanting to buy it and you go in and you lift an offer, or you're aggressive. You're the guy who crossed that bid-ask threshold. So in the traditional sense of delta and everything, we're always kind of talking about the aggressor. That's what it is. That's what determines all the color shading and everything. But on the flip side of that, anytime there's an aggressor that trades into an offer, go up and buy an offer, there was somebody who was a passive offer sitting in the book, and they're passive and I'm aggressive. That's how that relationship. So what we want to look at is areas, what I want to show is areas of absorption where it's passive buyers or sellers, which is, I say, it's just resting orders. They're absorbing supplier demand. So let's just look at a case for a passive seller. So let's say market rallies up and it's sitting up at some highs, and it's an institution. It usually is. They're sitting up at some level, and market moves up to them, and they're just sitting there. They just have orders, or they're constantly refreshing the book, and everybody's buying into them. So they're sitting there passively, but all the aggressors are just chewing into them. But they're just like, come on, give me all you can. I'll take them all day long. And they don't look, you can't really, because they're passive, you don't necessarily recognize it. And they just absorb. Huh?
Like an iceberg?
Yeah, you could think of it that way, but it can be done over a series of prices. An iceberg would be if they're constantly refreshing it. You don't see a big quantity in the book, but it constantly, you see volume traded is swelling, but it only ever looks like it's a small quantity in the dome. But the point is they're absorbing supplier demand. So passive sellers at highs, passive buyers at lows, and what you're going to see, or what we want to see, is widening of the profile. Now that's ideal. Say it's not required, but probably should take that part out because really you want to see it widen. That's true absorption because that's volume that's trading at that level.
When you say like widening, are you saying like one or two like specific levels that start to get longer?
Yeah.
Okay.
So let's look at some of these examples. So passive buying and selling. So passive buyers. Okay, I want to make sure. Just if you don't understand what I'm talking about, raise your hand or say something, because this isn't, it's kind of a flip in your mind of how you normally think this stuff. Now, ideally I would have had this be a down bar. Don't worry about that. We're looking here at the shape. All right? We're looking this market, we're looking at down here. You get a bulge down here, and up on the passive sellers, it's up there. So these are buyers, passive buyers down here. Why do I say that? Passive buyers because
There's a lot of aggressive sellers that were
correct.
hit. Yeah.
This is red. So there was aggressive selling at this price level, whatever price level it was. Actually, you can kind of, there's quite a bit of volume of trade right here, but I'm specifically looking at here. Aggressive sellers were hitting pretty hard right here, which meant there was somebody on the other side taking it and absorbing it. So that's what passive buyers, this is what that would look like. Passive sellers would be, remember, I'm just putting my sell orders in the order book, letting the market come up to me, and I'm able to get short, be able to put on my package up there at those prices that I wanted to get it done. And so this is a case where the aggressive buyers buy into the passive sellers at this price. So it's green because it was aggressive buyers buying into the passive sellers. Make sense?
Trevor, are you seeing the resting orders? I assume you see the volume of the resting orders on either side, buying and selling?
Well, the resting orders you'd see, in the dome.
Yeah.
Yeah. You'd see that, and you'd see these things growing in real time as the market's trading.
As it's actually happening.
Yeah. But the whole point here is the passive nature and this absorption. Remember, that's what we're talking about, absorption. Absorption doesn't have to happen at a single price. It can happen at a series of prices. One of the nice things in the market delta footprint is you're able to easily collapse multiple prices upon themselves to get a single, like this bar here could represent 2, 3, 4, 5 prices to give you an idea of total absorption maybe at a level versus a single price. Because if you're like looking at crude or gold, something that trades a lot of prices, a single price you may not, you're going to have all these little jagged edges. Sometimes it's better to almost look at it collapsed upon itself in a market like that to see areas and levels. Because, well, that's just, maybe that isn't for everybody, but if you're trying to find levels, you don't maybe care so much about a tick or two. You're trying to find an area. The thing moves, crude moves 20, 30 ticks. You want to be able to find that area where you can get in and look for that move away.
So this is kind of showing you the delta convergence, okay, isn't it? Because, aggressive buyers, bars widening, prices are really going up.
Well, we don't know if it's going to go higher from here, and I'm not trying to predict. I'm not even trying to say if it's going higher or lower from here. All I'm trying to, I want you to know when you see a bar like this, what this means. That absorption happened. And that meant that was a real important level to somebody. Now, another thing, I mean, when you get a move like this, a lot of times these are your other time frame traders, your institutions, and that's what's cool about these. You can look at them on any time frame. So you can look at them on the small time frames, but sometimes it's better just to look at them on the bigger and see the levels, the bigger levels. But it also tells you, we talk about stuck long, stuck shorts. You hear that probably a couple times. This would be one of those instances where they're stuck long and they're stuck short. Because we know they're aggressive sellers, and somebody, absorbed that. So what I'm going to show, did someone say something?
Oh, I was just gonna say that profile right there definitely shows delta divergence, doesn't it? Because I mean, there was a lot of
Right here.
aggressive selling, but it closed higher.
Yeah.
Right?
Yeah.
Is that kind of like what we should be looking for a little bit with the?
Well, that's nice. Yeah, that is nice. It tells you it traded down to here and then was rejected. I mean, that's ideal. Yeah. But I mainly pulled these screenshots out to show the shape, not so much what happened after the fact. I want you to understand what absorption, what it looks like.
That right there, the one thing I was thinking with what Dr. Brett was talking about yesterday with the stuff he was using in Excel, that's essentially kind of showing the same-ish idea, isn't it? That there
Yeah.
was a lot of aggressive selling that came in and it didn't move the market.
Yeah, you'll see as I complete the thought of what I'm showing you today, this is important, the absorption, but what we need to really make this valuable as a trade opportunity for us is a trigger, and that's where the imbalance is going to come in. I'm going to show, I'm working up to it, because it's one thing to observe this happening, it's another thing, because remember what I said up front, a trending market, what I'd like to see in a downtrend are multiple bars like this, where you're getting these bulges at lower and lower levels. That's what I would consider a healthy trend. Well, what we want to know is when we get something like this, when is it not moving lower, but it's actually going to, this was true absorption and now it's going the other way. That's what I'm trying to develop, the thought process here. Okay, let me go back to that. One other comment. It's kind of what I just said, but when we get this type of pattern with no follow through, that's when this really becomes important. Because then the absorption, it was true absorption, and it absorbed all the supply or demand at that given time. And then that's when we're looking for the rotation in the other direction.
Would you say like no follow through could either be like a sideways or down move? Would you start to think that there was no follow through?
Well, no follow through would be that the next bar for me doesn't take the high out.
Okay.
I mean, if it tests the high, you got to get. None of us are perfect. We're not going to, sell the offer at the high tick or buy the bid at the low tick. It's just you have to give your trade some room. And the whole idea is identifying areas and levels that you can do business at safely to minimize your risk and maximize your reward. That's what we all do. So that's what I'm trying to help show. So I want to show levels, but then also timing. That's where this imbalance trigger that I'm going to show, because it's one thing to identify a level, it's another thing to actually get into the trade and know when to do it. All right, so I call this just absorption trigger signal. Nothing fancy there, but it's absorption, and then we get the trigger. And so it combines the imbalance footprint, which I'll show and describe briefly here, with the absorption that I've just discussed. So we want to see passive buyers or sellers absorbing the supply or demand, and then we're going to get this trigger. And then this is it right here. It confirms absorption and failure at the level. So that's the time. This is the timing component, and then this is your level. Okay. Okay, I'm going to talk through this graphics. I definitely don't want it to be confusing. So on the left, these are basically two footprints. They're the same thing. This is the imbalance footprint that most of you look at. Never mind the boxes at the moment. And then this is the profile that I'm showing. And I'm not trying to convince anybody this is the graphic you got to use. I know there's a lot of benefit in it, and it shows some unique things that, in a visual manner, that you would a lot of times miss in the other footprint types. So I'm not going to. Well, does anybody have questions on an imbalanced footprint before we go?
Okay, at the top of the bar and the bottom of the bar, you have like a one-sided trade, either on the bid or on the offer with a zero. Does this have any technical indication?
Any what?
Indication to the move, I mean, when it comes to the bottom and there is one side there, on the bid and zero on the cask and the top.
Yeah, I mean, you can, that's kind of a talk unto itself, but I can make some comments on it. Clearly, you got quite a bit of volume of trades here, 1,100 contracts or so, and then you get 3 that trade at the next price level. Now there's something to be said about that. There's clearly no interest above that. Down here, obviously, it's not as much either. You're always at those end ticks. It's usually you're not gonna have as much volume as the tick below or the tick above. But I know there are people using the footprint that really key in off the type of information that happen at the extremes of the footprint. And that's just the way they use it. They have, they've identified some edges and some things they look at.
Trevor, if I
From your
may,
experience, I mean, does it indicate something? Do you have a read on it?
Yeah, the one thing I'll look at is where I'll get an instance of, it's not 0 by 3, but it's maybe, there's numbers on both sides, but it didn't trade a tick higher. That,
That zero doesn't mean anything?
no, that tells you it was rejected. Yeah, it just, they traded 3 at the offer, and that's it. But when it actually went, if it goes bid and you get a number here, and then it gets rejected, and that tells you there's more interest at the price when they can take out the offer, go bid, and then they smack it.
Because something I mean, as you know, I'm not proficient in that, but a couple of trades I took which were successful, for example, buying, I look at the bottom of the bar and I got 72 at the bid and 0 at the end. I mean, I would take it long.
Yeah.
And it worked. And the other
It's-
side,
I don't want to discredit it at all.
no, I'm just saying, I'm trying
I
to.
know, well, here's the thing. There's a lot of numbers in here. And in talking with a lot of people, and we do tend to focus on the edges, which there's nothing wrong with that, but people really, I think, they maybe put too much emphasis on the zeros, on these. I mean, it's going to happen a lot. You're going to see it a lot. But I'm not going to, everybody's different. Everybody's going to see things that mean something to them, and I'm not going to say it's not useful.
I'm here to take the benefit of your experience.
Yeah.
Why aren't you saying the 0 could be auction completion for that bar? Is that fair to say? Or no?
Yeah, you
If you
could.
have numbers on both sides.
Well, that is the way we describe it. When you get numbers on both sides that have an extreme, we call that unfinished business, unfinished auction.
You gotta look at the bars prior to that, though. You can't look at just the 0 and 3 and the 72 and 0.
Also, where it is.
If you look, but here's the thing, okay? Take 3 bars earlier, all finished at that same price that 0 by 3 is. So let's do the previous bar 0 by 10, the bar before that 0 by 80, the bar before that 0 by
Yeah.
160.
Yeah, that's right.
Now that's more significant.
Yeah, now that's a pattern, because I don't like to look at one thing and say that's a pattern, because it's not. It's just, it is what it is. If you're getting a market that's range bound, this is one of the things I do on a range bound, if it's going up and testing every time, heavier volume here, lighter, and then lighter, it tells you there's less and less interest. It's just weakening on each test. So that would be a more important thing, personally, I would think,
Trevor,
than,
before you go on that, I got a question because I'm just fixing to prove how stupid I really am. What I'm looking at on this imbalance, we have a 0 and 3, correct?
correct.
What's below it?
520.
526, 476. All right, when we trade our dome, we're at bid ask, correct? So what we look here is that there were 526 sellers at that level, those two levels. We don't trade one level at a time, we trade two at a time. We trade a bid, we trade an ask. So when we looked at that 3, we still had heavier selling in that 526. When you go down here, and this is where I get really confused, is that we're showing a green bar down here at that 1904, 933 bid ask. It's a green bar there, right?
Where are we talking?
All right,
Right here?
933, that one right there, that's a green bar, correct?
Correct.
But when it was at that level, we were selling it off at 226. So that level, in that level, we were selling more than we were buying at that level.
Yeah, so the imbalance, and this is definitely another talk unto itself, the imbalance methodology is looking at, it's a diagonal relationship.
Right.
520, that's, if you don't know that, that's okay, but you'd want to revisit that concept. We have some materials we can make available, but it's a diagonal relationship where the footprint profile, this color is based off just the delta on this price, It has nothing to do with the diagonal relationship.
Right.
So where I'm going, when I'm done here in a half hour, we're combining both to show, I'm kind of combining both, and you'll see. This is something I use personally in my, this is the first talk I've ever done on this, what I'm showing today. So I'm a little nervous of how it comes across, if I'm able to communicate it, but it's something I personally use, how I look at this, to try to extract value in multiple ways from the footprint.
This is an actual depiction of something that did happen.
Yes.
So what I find interesting is, on the diagonal, on the imbalance, 612 to 72 of the market's moving higher. 526 on the sell to the 3 in the market is beginning to come down.
Where are you at?
So on the bottom, the very bottom, you
Yeah.
got 72 diagonal to 612.
Yeah.
So the market goes higher from there, does it not?
I don't know. And I don't know how that bar developed.
Okay,
But
all right.
here's the thing. This right here, this 612, this is a buy imbalance. That's why it's green. It's 612 versus the 72. I don't know what my settings were, but we call that a buy volume imbalance.
Yeah. But doesn't that indicate, so as you go to the top, doesn't that show that the market went up from there?
No, I don't know. I mean, it closed right here. But yeah, it obviously moved away from that. Yeah.
That's all I'm saying. It moved
Okay.
away from that level.
Chuck?
I'm sorry, it's maybe a bit of an elementary question, but these diagonals you're talking about, like the 612 that's in green,
Yeah.
that's in green because of a ratio between that
Yeah.
and the 72.
Yeah, so when the market, when it was trading, this was the offer price, this was the bid price.
Got it.
And so we're looking at I don't know what I probably had it set to 400 or 500%, meaning when the ratio of volume between 72 and 612, what's trading on the bid and the offer is above my threshold of 400 or 500%,
Right.
it shades it. So like this here, 1378 versus 1943, clearly this number is not, they're not 400%
It's
difference.
50%.
Right. So that's why you only see some of these only a few. But so getting, let's see, I want to see what my next slide is. Okay, so here, let me finish the thought then. So this is kind of what we're looking for. We get this blue box, all I have it doing is highlighting when I have an imbalance present, a buy imbalance. So clearly, when you're looking at the imbalance footprint, like forget you can see this. If you just can see this, you can see a buy imbalance, we highlight it in blue. We got a sell imbalance, I highlight it in yellow. So I do in the same thing on this profile. So now when you're looking at the profile, now let's say you can't see this. You're only looking at the profile. You know there's a buy imbalance here based on whatever settings you come up with, and you know there's a sell imbalance here. We'll look at the next slide now. It'll start to make some, because I'm still kind of developing the thought. We're getting there. We're almost there. So sellers hitting the bid only to see a buy imbalance down here. So here's this bar. This bar, it opened here and closed up there, but it traded down to here. Traded down to here. And when we talk absorption, kind of getting back to that, ideally, this would be the fattest. We just see a ton of volume right here. But we do see, it's decent. I wish it was the biggest bar, but I'm not, that isn't the way it always is. But the point is, it's pretty good. And look right below it. Can you see what happened right below it? Like hardly anything. Just a little. So what that tells us is this thing traded down. There was absorption here. It did trade through it, which it doesn't have to, but it did trade through it. Just traded a little. And we get our buy imbalance, which is our trigger. That's our timing trigger, and this is kind of the level. So
that becomes support. That becomes really.
That's telling, it's telling us that it tells us from a timing issue, we've got that buy imbalance that we like to see at an extreme. That's where we want to see those things. And then it also tells us that, remember this is red. So those were those aggressive sellers hitting those bids down there, and they were being absorbed. So again, ideally, I'd like to see this be the widest bar, but it's not, but it's still decent. So this is kind of like this. These are the things that we kind of want to look for on the buy trigger. Passive buyers absorbing. That should be absorbing supply. Red footprint, which would be the negative. That's the negative delta. And then we get the imbalance. And like I said, it doesn't have to be the POC. Ideally, that'd be better if it was. That tells us we got some stuck sellers down at those levels, and that'll help us add fuel to the move. Now, the thing is, I don't want to make too big a deal about a single bar. It always what matters is where this happens. Like, you want to see this happen. If this happens at a level that you're looking at, and it's on your chart, a market profile level, daily high or low, whatever your levels are that you trade off of, that's where this is very helpful, because it's coming to your level, you're seeing that absorption, and then you get your trigger, your timing trigger. It's kind of like that 1, 2, 3 punch.
So what you're saying, Trevor, is that you have a buy imbalance at the extreme with a negative delta.
Yes. So it's kind of hard to, because you're
expecting a positive delta.
Yeah, and the positive delta. Well, I don't want to start contradicting myself, but what we're trying to observe is absorption, where we have aggressive sellers present, and they can't make it go. And so we're using them. They're the impetus for the move higher because they're stuck. That's why I like to see it, we want to see this as red at the lows or the green, the aggressive buyers stuck at the highs, because from a scalper standpoint, or if we're just trading our levels, that's where it becomes more important. So that's what we're looking for.
Is that the way you look at it then? The profile with the imbalance on the actual profile itself?
Yes, yes. So I have one of these charts up. I still look at an imbalance footprint, like the pure numbers, because I do like to see that. But this is, I'll have one of these up, like a quarter of my screen or whatever, one of my screens, where I'm attuned to this relationship and what's going on here.
Could you just briefly go back to the previous slide?
Yeah, so I have a chart up of this, and I don't have it outlining. I don't need it to outline because I can see the imbalances here. But I have it outlined on this because I don't know where imbalances are on this. I have no clue. But when I can have them come in, then I know. Did I go past? Oh yeah, so here's the sell. So we looked at the buy. Now this would be the one where we get the sell. Now this one's a little bit, I think, better example because you could see how this bar developed, and look how we get this cluster, kind of multiple prices. It's not a single price. However, this one is where we got our imbalance. And again, you can see it's because there's just a little trade up above, but nice absorption up at this level. In fact, you could see this bar here, it actually opened here, traded up, came back, and it closed here. So yeah, I say stuck buyers at that absorption level, and this is exactly what we want to see.
So the yellow box and the blue box indicate the imbalance.
Correct, because I have it set up, and I'll show you how to set this up, but it's going to show me every imbalance level on the chart. It's not just going to show me that one or this. It's going to show me anywhere. I mean, it could be anywhere. So I got my sell. There's a sell imbalance up there. Happens to be a buy imbalance down here. But here's where we got some true absorption. You got a wider bar. Right? This is where the width of the bar, it does matter. It just shows us greater absorption.
So the absorption shows you that it's not really moving, and they're buying. And then the yellow line is the trigger to get you in.
Yeah, that's right. The absorption it's like
And then they're all stuck.
it's like trying to run on the beach and then you run into the water, right? You're running on the beach, things are easy, and you hit the water, and all of a sudden it's hard to run in water. That's what they're happening. It's absorbing the energy. They can't move through it the way they did, and we ultimately want to see it stop or fail. And this is where this would be our signal of failure. It doesn't mean, I'm not saying you just get short every time you see this, but this is at your level, these are the types of things where everything starts to, it gives you some of the signals and clues you want to see.
Sorry, Trevor, as well as the imbalance and the absorption, are you placing much emphasis on the total delta of the whole bar or the cumulative delta on the day or whatever?
Well, like this bar, it's pretty safe to assume this would have a positive delta.
For sure, yeah.
And this gets into how aggressive as a trader, how aggressive you're going to trade. Because if you, there's not a set way to do this, but if you're somebody who wants a confirmed signal, you're going to wait for this whole bar to close.
Yeah.
And it's going to open right here. You already lost 5 or 6 ticks, and then you're going to get short here based off that signal. Nothing wrong with that if you're trading some big levels. Maybe if this is like yesterday's high, it's trading up against yesterday's high, and this pattern happens, that's fine, because 5 or 6 ticks maybe doesn't matter as much because you're looking for maybe a bigger swing away. But if you're just trading some, kind of scalping it, you've kind of missed it. So, I mean, I don't want to discredit the bar delta because I do watch it, but I watch that more if it's trending, and I'm trying to make sure I'm trading the right side, and I'm trying to sum up the trend. But if when it comes to triggering this stuff, I mean, I can't necessarily wait for that delta to turn negative if I'm trying to get really good trade placement. So it really boils down to the aggressiveness. Problem is, if you're too aggressive, this could disappear, and now you're short, and it's like, okay, now what?
And something on that, Tom, if you like the bar delta, just do a footprint statistic and do max delta, min delta, and delta change.
Yeah.
And probably on a bar like this, you'll see min delta and delta change pretty close with a wick.
Okay.
Yeah, which.
Yeah, the delta bars is what that
Yeah.
study, that'll show you those wicks, and that is nice, because then you kind of see a pullback.
But if you're trying to pick this as a level for, like, say, a swing trade, would you look at the cumulative delta as you go into this scenario at the top?
Remember,
So
if you're looking,
cumulative delta is ramping up, and now you get this. I mean, couldn't you say then it's a better signal than if cumulative delta was kind of unchanged on the day?
yeah, because the thing is, like on a bar like this, if you get true absorption, I mean, delta is going to be screaming probably on this bar. I mean, it's going to be really potentially spiking, because this is all positive delta. They're getting stuck long. That's the whole idea. They're getting stuck long.
I'm talking about going for the day, like, kind of like calling this kind of the apex. And then it's going, you know what I mean? The
Yeah.
delta for the day is 5,000, and this bar is 1,000. Now you got 6,000, and now you're looking for a move.
Anytime
Not
I,
2 ticks, but you're looking for, 3 or 4 or 5 points.
everybody's style is different, but anytime I see kind of capitulation or big moves in whether it be delta or price alone, I can't help but say that's, it's not going to continue, and you can't help but want to fade that. Now, I'm not saying you do, but you just say, like, it's blow off, Okay, moving on. So here's some of the rules of thumb. So remember, going back to the trend, the 2 market phases that I talk about, trending and bracketing. So I take the pattern that we just looked at. Think of it as in using that pattern in trending versus bracketing. So in trending, let's say absorption level doesn't need to be wide. Ideally it would be, but it doesn't necessarily. Happens fast. You're going to see these patterns that trigger, and it's going to happen much faster in a trending market.
When you say wide, what do you mean by wide? Quantify it.
The width, ideally it'd be POC.
So you're talking about.
The width of the volume. That's what I mean. Correct. Yeah, because we're looking at this graphic. So when I say the word width, I mean the width of the. Correct. Use this pattern in a trending market. You might use it to cover. So let's hope. Ideally, we're not all trying to fade a trending market. Hopefully, we're riding the the trend. So you get something like this. You would use it more as an exit, not so much to initiate a trade like I just described, but more as a way to potentially exit, partial exit or full exit of the trade, because you finally run into that. It's finally they're running into a level, and you get that trigger. And view it as a short-term level. So on a trending market, just because you see this pattern doesn't mean it's all over. I mean, this thing, it could just be a short-term pause where it absorbed it, and it does continue higher. Because remember what I said at the beginning, what do you see? A lot of times on a trending market, you do get these P-shaped profiles. So don't assume that on a trending market that this is all, it's all over here and it's going lower. Now bracketing, I want to see that absorption level be wide or be that POC almost, that's like an absolute requirement, I feel. So think of a market that's like this, right? Sideways. Market rolls up into those highs. You want to see that absorption up there where this pattern that I've just described, you have to see that be wide up there, otherwise that's what a bracketing market is. They're buying into the highs, they're selling into the lows. They just keep pushing each other around. That's the way it is. They're slower to develop, and you would use this pattern in a bracketing market to initiate. So when you get these signals, let's take for instance, this is part of a sideways market here. Market rolls up into that bracket area high, the range bound. This is beautiful. You get absorption at the highs. I get my signal. This is why I think I like bracketing markets more, because this is the type of stuff I'm looking at. So they chase it right up into a ceiling, can't get through it, and I know when they come in and they hit them, and you can, you're just playing, you're kind of playing those waves. All right, so here's, I think I got a couple slides of just some examples. This would be kind of similar to the example I just used, because remember, we don't know what's going to happen in the future. We're trying to make sense of what we can see happen and then what is currently happening. So here we get the market, it rotates down, starts to rotate back up, and I've got arrows on what I want you to see. So yellow, yellow, and yellow outline, that is our trigger. That's our, we have our sell and balance. And we have these the green profile footprints. That's our absorption. The aggressive buyers are buying into the offers, but they can't get it to go, and they can't get it to go 3 times. This is where your example of the zeros, where you're kind of seeing the market, it's trying, and you're going to say.
The best part for me is that the price that you're looking for got set the first 2 bars. The price level that you're going to be looking for this to happen, you already know from the first 2 bars in that chart.
Where are you talking, over here?
Yellow breakdown.
Yeah, then you get the breakdown, you get the volume breakdown,
Yeah.
and a retrace into it.
Yeah.
That's in Anthony's textbook when he writes it, I'm sure.
Well, this is why, again, we never know what's going to happen, but being able to judge. And remember, the thing that Anthony showed yesterday, the bands, the zones, I didn't put any of these, I didn't put them on there, but you can have these. I was playing actually with it this morning. I didn't think I'd have the time to include it, and I didn't. But you can have those zones extend out from here and see them on this, just to add another,
Just to clarify, you said so the zones can actually volume representation. For this chart right here, you can actually have those on.
Yeah. Like I was in the hotel room this morning playing with it, and you can get them to extend. Let's say a zone is, I don't know. Let's say it's right here, right?
Yeah, well, that one imbalance up there, right? Okay.
It would extend across. Now the thing is, you got to play with the colors, because you don't want, because these are already green and red. I was making them like blue and yellow, I think, and instead of a band, I had it be a line. So
Trevor, in this case, where would you enter? I mean, clearly to me, I can see in that 3rd bar where I would enter, but would you take any entry there in the first 2 bars where the arrows
Yeah, I probably would. Because you don't know how many times, you don't know if it's going to go right away. You got to trust it when it happens, because you don't know if you're going to have the opportunity. So on something like this,
I'd wait till I broke the low of that second bar.
right here.
I wouldn't, no, yeah, the third one, still in the third bar.
Yeah, well, I
And
saw
then went
that.
down, if
Yeah.
it broke those two bars next to it, two
I know.
right ones,
But
you
when
got
you
below
do-
that high volume, that's when I short.
Yeah.
But would you do it earlier? Could you do it earlier?
Well, and then you get into the question,
Because you're
when
high.
you get this, do you join the offer or do you just hit the bid?
You'd end up having your stop be 3 ticks above that.
That's what I was
And
thinking.
you'd only have a 3 tick loss if that was the case. If you're wrong, you'd know right now.
Yeah, but if, I mean, you got the setup right there, right? So you could take the chance for 3 ticks. That's what I was thinking. Right, because you already know you got to sell in balance and you have a positive delta, so you got stuck buyers.
Yeah.
Yeah, well, I mean, the thing is, if you still break that bar, see that? Okay,
Well,
we
I
go to the
confirm
high,
so.
we see where that big green blob is up there on the third one from the top there, the first, a big arrow. And we go to the second bar, you have to have a trigger bar, and then you have to have one that sets up the entry, an entry bar. And I would short that as soon as it left the bottom of that bar and put some high volume, sell. So you could do that on that second one, but I would wait.
The way I tend to do it, because I'll trade multiple contracts. So when I get this signal, it depends on how fast the market's moving too. If I feel like in the NASDAQ, if I'm trading the NASDAQ, there's enough volatility, I feel like I can join the offer and get it. If it's E-minis and it's slow, I can't join the offer. I feel like I'm not going to get filled. I might have to hit it. But then for the next package, I'll just work the offer because I'm not going to be as risky on that one. I'll let them come get me. Yeah. I won't put it all on at once. Okay, I'm running short on time, and I want to show you how to set this up. So this is just one more example, and then I'll show you just a few screenshots how you do this in the software. This is an example, and I know this I'm having it highlight the POCs as well. So there's looks like there's a lot going on here. Again, we're only focusing on the extremes. I don't care about anything in the middle. I'm only focused on the extremes, and particularly right here. So, we're retesting this high, and here's our absorption. This is like really nice. That's what we want to see. Absorption and trigger. This is like really nice one here. And it's a it's a retest. This is a nice example. Okay. I just want to show you that because I'm not going to, I want to make sure I show you how to set this up. Okay.
I was just gonna say, Trevor, the slide you just came off of that has one that didn't, if I saw it right, that has one that failed, right?
Here?
Yeah, on the bar two. Am I looking at that
Over-
right?
yeah,
The
over
second
here.
bar from the left, that's a failure? Or what am I seeing?
Yeah, but not necessarily. What you're seeing here, you do get the imbalance,
Uh-huh.
but you don't have the well, I guess you could say you got absorption on that bar, right?
It's not a big bar.
No, it's not as wide as
Yeah,
I
you're
like to
right,
see.
yeah, I see.
But it
You
is.
and you got a buy-in balance right underneath it, too.
Yeah, that's kind of like they kind of offset. This is just so much, again, in an ideal world, these are the types of patterns we see.
Mhm.
But that's a POC, is that correct?
Up
On
here?
that second bar, no, on that second bar?
Right
That's
here's the POC.
right there.
Yeah.
Notice you had, before you had to get, break through that before you go lower on this little chart. You
Yeah.
kept testing that level.
Yeah. All right. Quickly. Okay, I only have 3 slides on this, but to do this, you're gonna open up a footprint chart, and you can right-click on it and go to modify the footprint, and the style you want to choose profile. That's what gives you the graphic that we're looking at. And I can help you. You can reach out to us. I just want to show you this in case you literally wanted to start messing with this immediately. Then you're going to click this highlighted right here. And you will, from the next menu, just add the buy imbalance and sell imbalance. Add those two parameters, and you can see I did. My threshold, 400%, doesn't, obviously that's going to be whatever you want it to be. And set your colors. And check these hollow boxes, which I think I say in the next slide. Well, yeah, check the hollow boxes, because you don't want it to, you want to just see the highlight around it. You don't want it to overlay your color, then you can't see whether it was a positive or negative delta for the absorption. And then, this is a big thing. Anthony may end up talking about it, or this is kind of key to those bands or the zones that he has. This min diff, I tend to refer to it as a power user setting, but this is a minimum volume differential. That really allows you to force a certain amount of volume to be present between the imbalance in order for it to color code. So instead of like that 0/3, or we were looking at, it forces, it won't do any kind of imbalance unless the imbalance in this case is more than 400 volume. And the nice thing with market delta is you can do this on all different symbols. It can be all different. In the old software we weren't able to do that. It's just one level for the entire program, and that does not work when you're trading different markets.
With the threshold, I'm assuming that you mostly trade the S&P, so the volume of the S&P is quite large. So you have a 400% threshold, which seems reasonable. If I'm trading something with a lesser volume, does the volume have a relationship with the threshold?
If you're trading something with less volume, this matters, the minimum differential, but the threshold, this is a percentage. It does. No, it doesn't, because it's a percentage. The actual numbers don't matter as much.
A good rule of thumb, Mike, and for anybody else, and includes the filter, is when you play with it, if you have too many imbalances, then your threshold is too low. And if you raise it and you have no imbalances showing, it's too high. Just get a nice sprinkling of them, and you'll know what that is, especially with your experience.
Yeah.
Same thing with a filter. If you're getting a lot of numbers in the filter, it's not a good filter. If you're not getting any numbers, it's obviously going to be too high. So play with it, with both the threshold and the min diff. But I agree with Trevor, the threshold won't adjust as much as the min diff.
Yeah, this is the one that you'll adjust more on a per instrument basis. And if you need help setting that, or kind of don't even know where to go with it, contact us and I'll give you some good suggestions. You're going to see Anthony talking a lot more about this level, especially with these levels that he's coming out with. So that's it. I'll wrap up with that.
Just one thing on the data setting, is it a volume profile or a delta volume profile?
What are we looking here?
Yeah,
Volume.
straight volume.
Yeah, this, I think if you click in here, it says volume or it says tick or something. You want volume.
So
Most
those
people.
bars are volume bars that you were showing, not delta bars.
No, this is the data, the input that's going into all the
But
calculations.
the bars themselves that we were looking at are delta bars?
They were footprint profile bars, and I think I had them, most of mine were on time, they were time-based bars.
Okay.
I say that because we do have one called delta bars, and so it's not at all what I showed. So I can show you. Okay.